Hi, this is Akmir with the Bulletin Board Heroes, the weekend edition here at Vox Markets on Sunday, the 31st of October, the Halloween edition. And starting off with Gunson, which had a storming end to the week after bouncing off what was, I suppose, 1 year support for the shares. In fact, below 1 year support for the shares. So undoing all the technical work of the last year, but obviously not undoing the fundamental efforts the company's made. We've got strong bullish divergence with the lower late October low and a higher RSI trace, so that does suggest that we'll have a breakout through 105 and perhaps by the end of this month head up towards old September resistance around 1.35 for the shares. Obviously, early and end of day close really back below 0.8 pence, really delaying the upside scenario for the stock. Onto a stock which I don't look at very much, largely because it's a sort of slow burn situation rather than the fireworks that normally appear here on the Bulletin Board Heroes. Here we've got Gaming Realms, and the position here is it looks like we're just breaking that line of resistance from back in April, and we've also broken above the 50 and 200-day moving averages as well. So at least while we're above the 50-day line at 35 pence, looking towards the top of the rising 2019 resistance line at 55 pence, perhaps by the end of the year. Kavango is next, and here we've got a nice setup in the sense that the shares have spent the last week or so bouncing at and above the 50-day moving average, which is now rising at 4.95 pence. Above that, we're looking towards the top of the rising trend channel from back at the turn of the year as high as 8 pence. And that could be seen sometime in January at the current rate of progress. Obviously, we're cautious. You wait for a weekly close through 6 pence, but given the recent price action, looks as though there's no need to wait that long and just use a sub 5 pence stop loss. Onto a stock which may be making its first appearance here. I saw a few stirrings on Twitter regarding this particular situation. Kenovo looks as though we've had an extended basing for the shares since the early part of last year along the floor of this rising trend channel from 2019. The break of that line of resistance there from June around 36 pence suggests that while we're above that, we could be heading towards the top of the rising trend channel from 2019 as high as 80 to 85 pence, and that could be seen over the next 2 to 3 months. So let's see if that goes well. Stop loss back below 35 pence for that particular situation. Onto Macango, which has been a regular feature on Bulletin Board Heroes in the recent past. Here we've got a broadening triangle, floor of the triangle here, around 27, 28 pence, and above that, we're actually looking for a decent upside up to as high as 55 pence maybe over the next 2 to 3 months. If you're cautious, maybe wait for a clearance of the 32, 33 pence area, but it looks as though enough work has been done here, especially with the break of that resistance line there from August. And decent price action above the 50 and 200-day moving averages in the meantime. A couple of stocks which are closely related. First one is Open Orphan, which looks like it's completing its basing around the 19 pence level. We've had that come in as support, I suppose, since basically this time last year. We're at 1 year support for the shares, and on that basis, looking for a break of the September resistance line around 21 pence to give us an end-of-year target up to 30 pence for the shares while we hold above 19 pence on an end-of-day close basis. On to Poolbeg, which is obviously a stock market newbie, and here it's all been about the shares and their initial 10 pence level, which they came to the market at. A brief flurry below the 10 pence level back in August, but since then 10 pence coming in as support for the shares. And interesting that we've got that little flick higher for the 50-day moving average. That could be the trigger that brings the shares through 11 pence and triggers a rally up to a line of resistance from July, currently promising a 2 to 3 months target as high as 15 or 16 pence. So going into January for the shares, especially while we hold above that 8.5, 9 pence support area that was briefly in place in August. On to a stock which is a punter's favourite, hopefully still is a punter's favourite, has been for a while, a Premier African. Here we've had a bit of a bear trap rebound, so Recent support in the 8.1, 8.19 area. Had a little dip last week to 0.17, but shares flicking up quite well, and end of day close above that October resistance line at 0.2 pence. Could at least get the shares back up to the main resistance area here at 0.25. If we can do that quickly, maybe over the first half of November, then one can then bring out again the 0.35, 0.4 target that we're looking for at the top of the February 2021 price channel. 3 stocks to go now. First is Petroneft, which is in the Macango camp. A wonderful uptrend in the recent past for the shares, and bouncing and bear trapping just below the 50-day moving average, currently rising at 3.7 pence. View now is that while we're above 3.7, looking for as high as 6.5 pence, maybe by the end of January. Clearly a weekly close above recent 4.2, 4.3 pence resistance would speed the process along and maybe bring forward the target to the end of December. Bit of a press mention for Pensana today in the Mail on Sunday, and why not? It looks like a decent bull mid-move consolidation bull flag that we're in at the moment. Finding new support at old resistance around 99 pence and above 99 pence. Looking for a bull flag breakout through £1.20 and heading up to as high as £1.60 by the end of the year for a stock which has been highlighted as a COP26 winner. So let's see if it can live up to the hype. Finishing off with Tomco, which has had its moments in the recent past, but we've got a clear technical signal here at the moment. Charting signal, so it's a weekly close back above the top of that gap down that we had earlier this month at 0.6. The last time we had a close above a gap down and had a bear trap gap reversal, the shares rallied from around 0.5 to 0.88. So we're hoping for history to repeat itself on this particular occasion over the next month. I suppose the trend line break not quite so as important there as the weekly close above the top of that October gap. So pretty impressive, especially with the one-touch rebound off the 200-day moving average that we had during the week as well. So it shows there could be a turnaround. That's it from me today. More updates during the week.